Today's video is reviewing Workhorse, ticker symbol WKHS. First, I'll share the bad news from their quarterly report, then the great news. I worked for many years helping Fortune 500 CEOs make sense of their company's finances, as they often couldn't pinpoint where they were making money. I'm now using that knowledge to analyze stocks like Workhorse, but this is not financial advice, and this video is for entertainment only. Hi, investing friends. This is Lynn, and welcome back to 60 Perfect Ways to Wealth. And thank you so much for joining me here today. So let's go and review today's hot stock. First, a friendly reminder that if you enjoyed today's video, to hit the thumbs up button and leave a comment below. Workhorse is a much publicized stock that has been diving since they lost the USPS contract. I personally like their aggressive approach to technology, but they recently have been experiencing tough financial times. Now, first, I'll share the current negative news from Workhorse May 10th quarterly earnings report, which was well summarized by Zacks. Their article reported Workhorse quarterly loss of $1.04 per share versus the Zacks consensus estimate of a loss of 19 cents, which is an unfortunate earnings surprise of negative 447.37%. And Workhorse shares have lost 51% since the beginning of the year versus the S&P 500's gain of 12.7%. While Workhorse has underperformed in 2021, we all wonder what's next. Zacks reminds us that the industry's financial outlook will have a big impact on Workhorse. In the Zacks industry rank, automotive original equipment is currently in the bottom 24% of the industries. A May 10th Reuters article stated that the global semiconductor chip shortage has caused delays for the major automakers, including Ford Motor, Honda Motor, General Motors, and Volkswagen were forced to hold back production even as car demands picked up. Workhorse in their quarterly report stated that bottlenecks within the global supply chain and offshore shipping delays of commodity raw materials and components, as well as our initial stages of production, limited our capacity to produce during the first quarter, which then lowered their 2021 production forecast to 1,000 units from the 1,800 vehicles expected earlier. Considering that Workhorse only manufactured 38 trucks and sold 6 out of these in Q1, producing 1,000 units this year seems like a high forecast to me. The production forecast cut caused the stock to crash 15% on May 10th, along with Workhorse quarterly revenues of $521,000, which massively missed analyst estimates of $2.6 million. The company said it took a loss of $136.6 million, primarily due to the reduction in the fair value of its investment in electric pickup truck company Lordstown Motor Corporation. I also look at a stock's insider activity in order to determine employees' view of their company. Here is a screenshot from E-Trade that reflected much selling and exercise, plus awards of stock options, but no insider buying over the past year. At least the selling of shares has slowed to minimal amount in 2021, a more positive sign. Now let's look at the good news, what we can be excited about, as well as the impressive analyst targets for this stock. Also, to better understand why fund managers still own a significant portion of Workhorse stock. Sales for Workhorse first quarter of 2021 were recorded at $521,000 compared to $84,000 in the first quarter of 2020. The increase in sales was mainly due to an increase in trucks they delivered. You can see on this FinViz screenshot indicating that although the performance for year-to-date was poor, the performance for 2021 is up 231%. Workhorse quarter-over-quarter numbers showed sales as up 24,826% and earnings per share up 42,713%. I also like the fact that institutional investors are still investing in 43% of Workhorse shares, showing their conviction about the company's long-term prospects. Now, what do the institutional investors likely view as unique and worthwhile in Workhorse that I also view as a big plus? Workhorse data from their in-house developed telematics system demonstrates their first-generation vehicles on the road achieve up to a 500% increase in fuel and economy compared to gasoline-based trucks of the same size and duty. Over a 20-year vehicle life, Workhorse estimates their C-Series delivery trucks would save over $170,000 in fuel and maintenance savings. They expect fleet operators could achieve a 3-year or better total cost of ownership, break even without government incentives. As a key strategy, they have developed the Workhorse C-Series platform. This truck platform is available in 650 and 1,000 cubic feet configurations. Workhorse believes they are the first American OEM to market a U.S.-built electric delivery truck and claim that early incentives of fleet interest are significant. I personally find Workhorse development of their to be a big competitive advantage, especially as it lowers the per package last mile delivery cost by 95%. This drone is also fully integrated with Workhorse vans, including on-vehicle charging. Here you can see a slide from Workhorse Investors' presentation indicating the competitive advantage this horsefly drone gives them over competitive companies including Tesla, Ford, and Freightliner. Workhorse also has an impressive list of customers including UPS, FedEx, and Ryder. Yahoo Finance reflects a bearish chart for Workhorse, but a PE ratio of only 11.71, well under the S&P 500 average of 23. And they rate the stock as undervalued. I do expect that the stock will likely drop quite a bit further, though, until the financial reports improve. I do agree with the analyst forecast of $19.90 for Workhorse. Let me know if you own Workhorse, what your thoughts are about this stock, or at what price you plan to buy it. Also, if you found value, please give this video a thumbs up and subscribe. Now to view a more detailed video on Workhorse financials from Q1 that included key levels of resistance and support in their stock charts, click the link showing here.